I have a few emails. This one came in this morning. This one came in this morning, and the rest of them are from last week, so mostly Fridays. So we'll go through them and see what's around and what's looking. I did just went through sort of all the pairs. Yen seems to be topping out, but it'd be tricky to trade against it. So we'll have a quick discussion about that if you guys have got any questions. Anyway, so this first one is the analysis was done during the Friday, so obviously the bars, as we look at afterwards, the analysis, we can see what's happened. But the question here is, would you be looking at this as a trend continuation or as a range trade? I took a similar trade myself in terms of the pounds, euro pound, not the pound Swiss. But that trend line and support level was obviously quite strong. And yeah, I did a similar concept on the euro pound. I'll show you the trade I took. It was a range trade. We had this swing high off the horizontal, and I was just going for the other side of the range, not as a trend continuation. Although you get lower highs, but you also got a higher low, so it's more range bound than range trading. Than trend trading. If we get some more buying off this, obviously we're going to close down our trade, and then you could potentially look at that as a new phase one in the direction. However, your analysis, I think, is sound, mate. With that strong support off the trend line as well, and that's your target area. That's all good. Bullish price action. Are you doing it as a trend continuation? This is your cycle off this trend line, yeah, and you've got your Fibonacci coming back to what, the 48.6 or the 50, and that's your cycle. Then, if you're trading it as a trend, I would have taken it as a range. I didn't see that cycle, or don't see that cycle, but you make a valid argument. Then that would pose the question of, surely you'd be targeting up here. This target here would suggest a range, which you've got here. Yeah, quad bottom. Yeah, that's all good, mate. And that should have gone at least some way in your favour. So the next one, Noxec, yeah. This one was looking good cyclicity. It did not work out. I also took this one. I haven't even started quoting it for today yet. Also took this one short and got stopped out on Friday, thanks to this bar here. But that was looking okay. And your analysis would similar to mine. There is a horizontal. It's reasonably. It's not a strong one, as you would recognise. But it's cycling off the 50 EMA and the 200, which looks like they're about to cross over. The retracement, yep, everything's there. I mean, unfortunately, we didn't get the price action in our favour in that instance, but that's unfortunate. With the bounce in oil price has pushed the knock higher, but you'd look at that. You can see all the selling here. There's no reason why you shouldn't be looking at this trade. Selling in nearly every bar here at where we expect the selling to come in, so it stands to reason to take that trade. That will work more often than not, but in that instance, it wasn't showing. Okay, then come to this Euro Aussie attached to a trade we considered placing. I have made comments on the chart. Feel like we just keep missing out as when sticking to the rules, but this is an example of how we miss out. We were going to place a trade where shown, but on reflection decided you would want us to wait for the second seller bar. But when that came and made such a big move that it was almost over, you can see what we're going to do on the chart. So the question is, did we do the right thing by waiting, which meant we missed the trade, or should we have placed it as we indicated in the notes? We have had a lot like this, so it's very frustrating. Yeah, look, you got this range here, or some sort of range. We're considering it as not according to trade off a high test. I think it's an aggressive entry to do that, right? So, such as the Kiwi, I'd only do an aggressive entry when you're trading with the trend. And here I had an aggressive entry underneath this high test bar. We then had an inside seller bar, so I left the order in and we got triggered in. That aggressive entry was only 0.5%. Then added another 0.5% underneath the confirmation bar. Obviously, the market's now just trading sideways to up a little bit. And I've moved, because of this bar, reversal bar, I have moved my stop. But the concept of getting in on an aggressive entry to me should only be taken when you're going with the major sentiment. Okay. Yeah, it's frustrating when you see large moves like this that happen, um, and you don't get the opportunity to get in. But that's, again, it's a matter of just being patient. And if you're doing your work on each one, then you should see them coming and a potential, and get ready for the potential entries. Right? So the euro pound, we had that swing high, and so when we're seeing this bar form, you're going, well, if that's a seller bar, lower high, lower low, I'll be placing an order in the next morning. So then when that does, you get into the trade. So with the Euro Aussie, I don't know if, I think you did the right thing by waiting and then missed the trade. That's the smarter play, rather than, hindsight. Yeah, it looks, we missed the trade, but it was a tricky sort of setup. With that just one seller bar after all this movement is, to me, it would have been a low probability trade. Obviously, the Mario Draghi's comments on Friday pushed this further south, but I think it's, look, you can't. To me, an aggressive entry should be only done with the sentiment of the market. And long trade, I presume you meant short. Swing high, 10 pips, profit support line, risk reward is 2.2, 123. Lower highs, lower lows. Did not traders wanted to wait for the second seller while I was considering entering 10 pips above the, yeah. Look, I think personally I would not look at that with just one high test bar. I think it's a high risk going, and it's not, I'm not very much good at trading ranges anyway, so it's, to me, it's just choppy and crappy, and I wouldn't want to be risking even a small amount against that on an aggressive entry. And if it has the move like it did, after you sort of identified the trade, then you miss out. But to me, that's a lower risk than sort of being in it and wrong, because you've gone in early. If that makes sense. I know you're online now, but does that sort of clear it up for you, or it can get frustrating not being participating in such moves like that? But that's hindsight saying, well, I'm missing out on all these trades. Yeah, but you're not exposing yourself to risk either by not being in the trades. Um, and it's, yeah, to me, there was a low probability trade anyway. It was only news that made it look good. So I'm not so certain that it was the right thing to do, going in at 0.5% or going in a risk. As I said, I'll only go aggressive entries with the trend. Certainly not in a phase two would I get aggressive, and I certainly even for ranges, I think it's a tricky matter because you're going against this sentiment here. Okay, but thank you for sending that in. That's you just got to be patient. You only need to, you don't need to be there for every trade, and to get your 1 or 2% a month. It's maybe you only really 3 or 4 trades a month, which is not many. Yeah. Before I go into the next ones, I'll just show you what I've got on. There's, as I said, I'm in the Kiwi, have moved stops to above this reversal bar. Went in with an aggressive 0.5% with the trend, making lower highs and lower lows, going with the trend. Added to it on Thursday after this continuation bar in the direction of the trend. The Chinese news on Friday sort of upset the apple cart a bit, and so we moved the stop, and now it's just an inside bar at the moment. Other things, trading this, as I said, range trades. I don't get right often, but this one is looking okay. Being short euro, long pound, I think fundamentally is a good trade. We had the divergence. You had to swing off the resistance, and money trading it for across the range, so it's 2 times my risk, which is good. Pound knock, looked at this, got taken in by the spread, getting this swing again off a horizontal. I've got highs, lows. What was resistance became support, became resistance, and then became support again. Moved my stop this morning after this. Again, it's a reversal bar. It is a low test bar, but that's good for in the favour. Gapped open this morning, but so I moved my stop. Momentum is at the right end of the scale to be getting long and targeting here, which is 2.5 times the risk. Yeah. And finally, Aussie yen 4 hour. We started to see the acceleration here, the buying again off a support level. The daily was momentum at that time was heading back up again. So got into this. I haven't moved my stop yet. Really, this bar was the only time you look at moving your stop. And to me, it was, well, what am I going to save by doing that? And when I'm just getting closer to the market, my stop's better here. And then we had a strong continuation bar, thanks to the Chinese interest rate cut, and then 2 inside bars. So, still haven't got a reason to move the stop at this stage. So that's all I have on at the moment. Yep. Okay. So the next one is dollar CAD weekly. Okay. New phase 1 at the bounce, higher highs. This came in on Friday, this email. Friday afternoon. Trend continuation, bullish price action. Dollar CAD. I know I got bullish off the 20 EMA. And we got in on that. Obviously got taken out after the Canadian or the Chinese interest rate pushed all the commodity currencies higher. Yeah, so the Chinese data pushed all the commodity currencies higher. Now back to the 50. And 786, but there's also, if you look at that, we're back to that 50. Price is under it now, so we're waiting to get bullish price action. Week ending the 21st. Got triggered in, turned out to be bearish bar and arguably a bearish engulfing. Overnight there was CAD news, better than expected. Try to break even or minimise loss, and what is the best way to manage? Not sure. You wouldn't have had a chance to manage that one really. As I said, it's this bearish engulfing bar. You could have moved your stop underneath that. Potentially, but it's not really a strong reason to move a stop. And obviously, then the news on Friday pushed it out, and nobody was expecting the Chinese to do that. So that was there's no way you could have avoided that. Coming off the 20 EMA, you are a distance away from the 50. So if coming off the 20 is a weaker entry, so your risk should have been a lot lower than normal. So maybe if 0.5% is your maximum risk, you should have been looking at it something like 0.25 or 0.3, because you're only coming off the 20 EMA, not the 50. Yeah, that's the only probable thing I would add on that one. Kiwi, bearish price action, horizontal resistance, order number, put a pending, entered the market, the low, got triggered on the 20th, turned out, but overnight there was US worse than expected, so try to break even. How the best way to manage it? Okay, so you came in on this underneath this bar here. You've moved your stop, I presume, because your stop should have been above that swing high there, and you don't think you would have been taken out yet. But as I said, the way I've managed it is that yeah, you would have been taken out. We've got this reversal bar, so now it's the time to move the stop. Yeah. Yeah, you would have been taken out because it tagged the 50. This was in the afternoon as the day was already progressing. Again, seeing these setups, you take them every time. If the market gets that swing with the trend and off a horizontal, you take them every time, because even if they're 50% of the time they don't work, the other 50% of the time they will pay you, and pay you well, because that's where you make most of your money, is trading with the trend and getting in on those entries and going with the sentiment. You make more money doing that than trying to trade against it. And so if you do that every time, it may only work 50% of the time, but when they do work, they will end up paying you more than what you've lost on the others, if that makes sense. And that's why you need to be targeting a risk reward of 2 to 1 or more. Euro Aussie phase 1 trend continuation. Phase 1 trend continuation. Okay, so you went in there and hit your target. Or did you just close out? I think you must have just closed out. Because it should have closed you out on this bar by the look of it. So you've obviously made money on the trade. I can see that. Your stops here. Trailed your stop to there. I'm not sure why. And then you get taken out there. I don't understand why you got taken on this bar here instead of that bar there, unless you actually manually close the trade. But this is your setup. Phase 1 trend continuation, and that's what I'm confused about, because I don't see it as a trend continuation trade here. When you get lower highs and higher lows, it's not a trend continuation. This is more of a range trade. Yeah. You made money on it, but it's not something I would have been looking at, and certainly not as a trend continuation. Okay, scaling in, once you've got, question here was scaling in once you've got, I didn't end up scaling properly. Scaling in or scaling out? Well, scaling in is when you, once your trade is in the money, you can add to it on the shorter time frames. But we can discuss that in boot camp in a couple of weeks' time. But yeah, I don't see this lower highs, lower lows. Take profit 1, take profit 2. And scaling out is creating a 2 orders. If you've got 2 targets, create 2 orders in MetaTrader, equally split or equally divided in the risk. So if you're risking, probably risking $250. If you're risking $250, your lot size is 0.17, so you do one of 0.9 and one of 0.8 to split your risk across them, and obviously your entry price and stop loss is the same. The management of the trade is the same, but 2 different targets on them. Yeah. Okay, but yeah, maybe discuss that with Nick in the coaching sessions, if you want to clear that up. Okay. Sent me this. Right. I'm not exactly sure what this is about. This is income generator. I don't mind you guys trading income generator, but you need to be doing some analysis, right? So trend down. It was euro pound. Look, this is you got to be, if you're going to trade the income generator, you got to understand what it's doing and what the signals, how it generates a signal, and how best to take advantage of that. And we can see that in a ranging market, which the euro pound is, the signals you're getting are just crap, and you would not trade them for any reason. RSI is in convergence. Well, no. Excuse me. RSI was in divergence. Fib is past the 786. Trend down. End of phase 2. No, it's not. It's at the end of phase 1. Bounce off the horizontal resistance at 80.34. Well, it did do that. I mean, mate, you got to, if you're looking at this pair, you should be saying, well, yeah, there's resistance there. There's support down here. And there's potential inner range in the middle there. Get rid of all that colours, get rid of that freaking income generator. Unless you know how to trade it properly, don't even bother looking at it, because it's just crap. Alright, what's this? Euro Aussie 1 hour. .0 trading. Right now, Euro Aussie 1 hour. Again, not exactly sure why I'm looking at this. There's no notes on it. Yeah, so you need to identify the range, and we've got clear checklists on trading ranges or trading with the trend. You said of end of phase two. Well, no, this is phase one is when price is moving away from the EMA, and that's clearly moving away from the EMA. So it's not the end of phase two; it's the end of phase one up here. As it gets overbought, and then you get a divergence, and so then you're looking to go short. In the Euro Aussie, I don't mind you trading the hourly, but you've got to have a clear trend in the daily, and I suppose I can't see that clear trend. All I see is just messy range, right? So it's once you've identified a clear trend, then you can use the cyclicity on the shorter time frames to participate in that. But at that point in time, as I said, you don't have a clear trend. It's just messy. So again, I don't know why you've sent me the Euro. Sent me this. I don't really know what point zero trading. That's obviously some sort of strategy. Don't know how effective that is. ABC, ABC, yeah. And this to me is not a checklist. It's I don't know what you're trying to do there. It needs to be explained a little better. I don't know if you have had coaching with our coaches in Sydney, but I would suggest you go and do that to get some clearer idea about what you're trying to do and what you should be doing. Okay. We come to dollar CAD. Yeah, this was a reasonable setup and trade. It would have triggered you in, and then you would have been taken out. Again, as I said, it's coming off the 20 EMA, which is this blue line. You should be doing less risk than if you're trading off the 50, because it's a weaker entry. Okay. Dollar knock. Again, you're coming off the 20, so it'd be a weaker entry, so you should have less risk on it. I don't know how this performed, but I would suggest that it's with the knock sec getting stronger, that perhaps it didn't perform too well. Oil price, it's just going nowhere, isn't it? So I'm not sure if you're in that, but it really isn't going anywhere. Nice. I like when it comes off a previous high like that, and you get the cyclicity off. It comes back and tests previous highs like that. Yeah, I think that gives you great opportunities for trading. Trading off horizontals will always be stronger than trading off just a trend line. And so if there's a clear horizontal, then it's good. So I'm not sure if you're into that one. I know you've had a lot of success with this one all the way up, so I hope you continue to have success with that one. And Kiwi, yeah, don't know if that's the cycle. I would have had the cycle from here. This is obviously clear phase two, then we get another phase one with lower lows. So I would have had this, the Fibonacci from there. Clearly there's some selling coming into the market, again off a horizontal. We can see that the horizontal is these lows, these highs here, which happens to be a low on the weekly over here somewhere. Oh no, that's that low I was thinking of with that high. So we've got what would probably be a soft horizontal, but the Fibonacci I would draw is that there. Yep. And yeah, with all this selling, at that point where we expect the market to turn, you'd take that trade every time. Four touches in the last 2 months. Yeah, horizontal resistance. Cool. You guys are pretty quiet. There's quite a lot of you online. Euro Aussie. This is going back to Thursday. Ignore the TP2 in the chart, but basically originally I wanted this to be a take profit, but now I wonder if I should take profit at neckline. Look, Euro Aussie, come back to it. Head and shoulder patterns are reversal patterns, right? So you've got to have, I don't see this as head and shoulder, right? It's a reversal pattern. So you've got to have a trend leading into it. So here we have a strong trend leading into what became a head and shoulder pattern across here. Don't see this as a head and shoulder, I just see this as crap, just cycling either side of the 50. So a little, I don't see this as a phase one trend continuation. I see it more of as a range trade. As I said, it's paid off for you. That's great. Inverted head and shoulder comparison. Well, yeah, that's this one here. Inverted head and shoulder. We can see shoulder, head, shoulder. And there's a head and shoulder pattern. Shoulder, head, shoulder. But these are changing trends. And right now, if that's a shoulder, head, shoulder, you're only changing this trend, which is really not much of a trend to change. So I just don't see it. I see it as range bound. And still range bound. And I'd be leaving it alone until I get a cycle underneath. So looking at something like this, you know, also range bound and friggin' crappy, but you've got a cycle underneath. Yeah. Phase one, phase two underneath the EMA. This is very bad, analyst. Lucky it was cancelled in time. Lesson learned, and to add to my trade plan, never to put a trade in the hourly without properly assessing the daily chart. Demonstrates my. Also, I was incorrect in drawing my divergence levels because I rushed. Good. Do not trade the hourly charts of the rest of the month of November. Okay. Well, yeah, Aussie CAD is going nowhere. And that's pretty messy stuff. One could argue that you've had a cycle underneath and now you're making another cycle with lower lows. Fair enough. This one here didn't obviously make a lower low and didn't get anywhere near, you know, oversold. So is that really a phase one? Quite literally, you know, you're talking this resistance level. What I'm seeing is that, and it's crap. And if it's crap, then you shouldn't be looking at the shorter time frames. All right. If something's trending and trending well, let's look at this one. All right. These bars like this, where you see selling in a bar, in the daily bar, right? So this move across here, this inside bar here, this low test bar, this bar here, what that's doing, what that is the cyclicity on the 4 hour. Yeah. So that's where you get the opportunity to look at the shorter time frames. But if something's not trending, then stay the friggin' hell out of it. You know, Aussie 4 hour took last week. As you're getting these pullbacks, this is the opportunity for the 4 hours. You know, and in here, the selling in those bars gives you the opportunity in the shorter time frames. Right out. And if you can't see anything in the daily, stay the hell out of the shorter time frames. Daily chart wasn't even uptrending, so I was trying to trade against the daily trend. Well, I don't see a trend in the daily. I don't see anything in the daily at any point. Yeah. just absorbing. Okay, thanks. Well, that's all we've got for today. Looking ahead, there's not much out. Oh, there's interest rates. Sorry, inflations are all still the story of the moment. But there's no central banks meeting this week, so that's okay. They'll start to meet again next week with the Bank of Canada and Bank of Australia all lining up. I do see a bit of chop here in the Aussie. We've got this these two larger fibs. From that low, we get the 38% retracement, which was support. And then from this one, we've got the 50 retracement, which is also support. So there's your 38 support and your 50 support. And I see it a little bit choppy. It's really unclear as to what the trend's going to be. This thing, any opportunity you can to sell it, take it. This one, I'd prefer to be buying it than selling it, but I've been wrong all the way down here. But I still see that they're doing pretty good data, certainly better than the friggin' Europeans or the Japanese. Buy this at any opportunity you can get. That's still going to go to 120. This one's a little, again, I think it should be in the low 70s, but it's pretty choppy and filthy. And I'm filthy that the market didn't run as it should have. Thanks to the Chinese rate cut, it's stuffed that up. And yeah, that's pretty much it. Maybe look at this one in a couple of days' time. I'll get ready for it, but there's little out there or presenting itself at the moment, except for maybe trying to counter trend the yen. And I think that carries a shitload of risk, and I'd rather that you guys avoid that. Okay. You guys got anything else? Any other questions? How you finding everything? Everyone happy? Doesn't look like there is divergence on the dollar yen. No divergence on. Oh, well, there is. From if you look at it, there is divergence. You got these highs. If you you got all that, and you've got that. You could say there's divergence, right? Let's just have a look at some of the other yen crosses. Too much GNT last night after your return from here. Yeah, there's no opportunity, there's no selling. I'm bullish in golfing, but I'll leave it the hell alone. But we've got a swing high on the Swiss yen. Here, your risk-reward ratio you need to be careful of. Probably get back down to that area there, and maybe that's a decent risk-reward. But looking at almost a 300 pip stop. Same here. Be careful of your risk reward. This one is clear divergence. Yeah, clear divergence, and this one I think is probably a safer back to the 50. But there's this high you might be careful of in terms of seeing what price action happens when there. And even if you go to there, it looks like it's just over 1-to-1, but you certainly be targeting the 50. So that's reasonable. Is divergence here in the Aussie yen, even though I'm long it. It's reasonable, and then you're trading into the crappy ones, which I avoid. I don't really trade exotics all that much. I would probably avoid them, but certainly in the dollar yen, you could argue that there is divergence, and there's a bit of selling, but I think it's very tricky to be trading against this major sentiment, so I would rather be patient and wait for. Okay, so let's see this pullback and maybe get a long trade coming off it. You mentioned caution not going long on dollar CAD or CAD US, just waiting for a clear buy price action. Also, MACD still seems bearish as avoiding at the moment. What's your view on this? Is it too early to look for a long entry in dollar yen? Um, yeah, the dollar yen. The 4 hour, it has been cycling along the 20. There is a little ring low here, but then there's a seller bar. Probably staying away from it off this bar, but you want to be trading off a support level, and prefer to be down around 117 to get a decent entry. And if it doesn't get there, then you miss the opportunity. But it's far better to be patient and wait for the ideal entry than to rush into things and get caught out too early. Okay. Dollar CAD. It's dollar CAD, not CAD dollar. Okay. Alright, so dollar CAD. There is the support here of this 50 fib, which is that monthly, that large move there. Also got that one there, which is probably the resistance when you get there. But off this, highs in what was that, 2007, I think it was, to the lows here, that 50 is offering big resistance and is now should be offering support. What we're not seeing at this stage is any buying, which obviously we need to see. But this is an area that I'd look to get long, and having that, you'd say these highs here, plus that 50 fib, plus the, if we measure this one, you've also got the 78.6 offering support. We just need to see buying price action right now. Momentum's in the right end of the scale for us to get in. It's I prefer to be getting long under 50 and short above 50, rather than getting long sort of on 50. And if you can get long even lower than sort of towards the 20 mark, it's even better. But that's, we need to see buying, so it's not going to be a trade for tomorrow morning. That'll be just an inside bar. Then on Tuesday we need to see buying, so Wednesday morning there may be something here if we get buying on Monday and Tuesday on it. Okay. MACD is still showing bearish. I don't use MACD, but RSI is still showing selling, and if it continues to sell, then obviously we just don't place an order, and you're not going to look to get short until it does a cycle underneath the 50 anyway. So just keep an eye on it, shortlist it, and be patient and wait for the price action to come in. Okay. Nothing else? Well, I shall see you guys on Wednesday. If you need me, you know where I'm at. Okay. Thank you, sir. Thanks, guys. You have a lovely day. And I'll get this up online directly.